Let's get some more perspective on the markets now. Allan Boomer is Managing Partner and Chief Investment Officer at Momentum Advisors. Thanks very much for being with us, Allan. I guess a lot of people, as we start this new month, you've got this laundry list of uncertainties. We just went through some of them, and they're trying to make sense of the mood of the markets. What's your best sense right now?
Thanks for having me, as always. Look, there's a lot of reasons to be worried right now, and the market is sort of reflecting that. The sell-offs we've seen the last few sessions, it's really, largely in the U.S., it's really steeped on what's happening with the Fed and this view of whether or not we're going to get a hard landing of our economy. I feel a little different, though. I acknowledge all of those risks. I actually think a lot of the risks that folks are worried about today already priced in, right? And so I'm starting to think about, well, what happens next? Like, what happens after the Fed is done tightening interest rates, and what happens assuming we don't fall into a deep, deep recession, which is kind of my base case presumption.
And how is that influencing the way by which you position in the market right now?
Yeah, I mean, we've got to be patient. Like, this is one of those times where you don't want to make really big and drastic moves. The things you're looking at investing in today, you've got to be thinking more, a longer time horizon than how am I going to be looking next week, right? And so you've got to know what the sources of volatility are and be able to kind of look past them and really try to find value. And again, like, the Fed's a big source of volatility, the midterm elections, inflation, looking past all of those things, where do I find true value?
And how would you characterize that value opportunity out there? Where do you look for that?
Sure. So right now, really, this whole year, value has outperformed growth. Up until recently, growth has started to rebound up until Jackson Hole, when the Fed came out talking really hawkishly about inflation. But I think growth stocks, particularly the large tech stocks, there's a lot of value there. Like, I'm seeing stocks in communications and in technology at valuations that I've never been able to buy these stocks for those prices. And so I think it's looking past the noise, it's thinking about which companies are well positioned for the future in a post-height, an environment where we're beyond the Fed tightening interest rates.
The other part of the story we were talking about, Allan, beyond how aggressive ultimately the central banks are and what that does in terms of a cooling effect for the economy to fight inflation, is when does China get back to some version of normal? Because we are seeing constant concerns. We're seeing it right now in the commodity market based on their continued COVID lockdowns and how that's biting demand right now. I mean, it's hard for any of us to answer that question, but how do you position around that?
Yeah, I think it's a great question. In a lot of ways, in a global economy, you can't just sit out for an unlimited amount of time. Like, there will be other competitors who step up to produce the things that you used to produce. And I think, that day is coming where China will have to reopen, because otherwise they'll be, I won't say replaced, but there'll certainly be some other countries, other industries that, other competitors are going to fill a lot of the place of China. Now, the one issue, though, is that the Chinese consumer, which has, again, been completely cut off from the global economy. And so that is certainly a headwind right now. And the way to position around it, really, again, is to look for value. Like, I wouldn't touch Chinese equities right now, given sort of, I don't really understand the game they're playing all the way. But I do think there's the volatility that's created will certainly create opportunities in other parts of the world.